Good morning, everyone. Welcome to Mel Gacee Trading Together. It's really good to see you here. Let me get my screen shared for you. And it has been a bit of an explore. We have gotten a large push up this morning, a big gap up at the open. We're going to get to our charts here. There we are. And we just finished this really parabolic move from the opening bottom of the range to this current top right here. So pretty big parabolic move there. I've already traded a couple of times this morning. Traded calls, did well. Now, remember, for anyone who is new to day trading, I am trading options and I am trading today's expiration. So, anyone who's new, what that means is I am buying options that are going to expire today. So, an option that expires today has no value at the end of the day. So if I'm going to buy these options, I want to be in and out of them quickly. They are 0 days to expiration. They're going to lose their value fairly quickly. So my style of trading is in and out, scalping, day trading quickly. I want to be in and out usually within even sometimes a few seconds, but sometimes a few minutes. Occasionally I get stuck in a trade that is I've got to wait on. And that can be up to a couple of hours, but I don't like being in trades that long. So that's my style. It's in and out, it's scalping, and it's options that are 0 DTE, 0 days to expiration. And if you're here this morning, I just want to welcome you. It is so good to trade together with you. That's the name of my company is Trading Together. And it's really what I love to do. I love training new traders. I coach a lot of people and I coach very experienced traders and I coach very new beginners. This stream is meant to be a really casual, open, comfortable environment that's safe for people who are really trying to learn. So drop your questions in the chat. I really welcome them. Don't be worried about this is a newbie question or anything like that. That's what this space is for, okay? And sometimes I'm going to speak, and if I'm going over your head, please stop me and ask me, what does that mean? All right? Okay, I'm going to take a look at some calls right now already, believe it or not. Let me get over here. Because this move has just been pretty strong this morning. Let me do this on my other screen so that you guys can see these charts. So let me pull up my possible trade over here. So I'm going to be looking at today's expiration. So that's December 18th. And I'm looking at the first call strike in the money. Now, if that doesn't make sense, it's basically, well, let me show it to you. When we go over to our option chain, we're looking at calls on the left, puts on the right. Remember, calls are going up, puts are going down. So I'm looking at the first strike in the money. That's how I always trade. Today's expiration, first strike in the money. Has to do with the deltas, but I won't go into deltas. Basically, deltas and gammas, you're gonna get the most bang for your buck at the money is the way that I would describe it. So I'm going to look at the first call in the money. That's going to be right here, the 680 call strike. Okay. It's only $1.39 right now. You got to multiply that by 100. It's 140. And then you would put in however many contracts you're comfortable trading. That's how I trade these options. Okay. And I'll trade over on this side. Now we are sitting right now, this blue line here, represents our high of day from yesterday. So we could, I may not take the call right this minute. I'm just kind of getting prepared for it because we could get a response here at this level. So this is, like I said, yesterday's high of day. We could slow down here. So I'm going to look at a daily chart here in just a second, and it looks like Slazer's on. Welcome, welcome. Has a question indicator that you have in between the MACD and the price graph. Great question. Can I just call you Slay? I hope I can. Thank you for asking that question. This is a custom indicator that I have built. I'm currently testing it, so it's not in rotation, but it's on my screens because I'm watching it and I'm testing it. Okay. We're moving a little bit slowly here. If we took calls, they may not move as quickly as we did when we saw this big jump here. So that's what I'm kind of considering here. We are just over the high of day from yesterday. And we are getting a drop on the VIX. That's the other thing to bear in mind. Remember that the VIX is the volatility index. The VIX goes out and it looks at options 30 days out on the S&P 500, and it tries to gauge the fear or the complacency in the market. When the VIX is going up, we could say that fear in the market is going up. So we would see the market start to come down. As fear increases, people pull their money out, they go other places, and the market comes down. As complacency rises, we would call that a risk-on environment, we would see the VIX come down. So the fear is coming down, complacency is rising, risk-on trading is rising. We see the VIX coming down, we see the market going up. So that would make sense here. You can see the VIX down here in the lower right quadrant of my screen. It is consistently moving down. We're at a low of the day right now on the VIX. All right. So we're real slow here at this top. I'm gonna wait a second on these calls. I would like a better entry. Now, is this thing just gonna grind and go all day today? It could. Remember, we are also dealing with OPEX. That is the shortened name for options expiration. So the monthly options are going to expire tomorrow, December 19th. That's known as OPEX. We see a lot of times big movements in the market at OPEX. This is big money. They can't move in and out like retail, like we do, right? We can move in and out because in essence, we're trading small money compared to the big dogs, right? They take time. It's like it's maneuvering a big ship, right? They can't turn that ship as quickly as we can. So they are going to get in and out of positions, their options positions, on a monthly basis. Those expirations are coming up. Those options are going to expire. They have got to reset their positions before expiration. Now, I've noticed back in the day, you could see a lot of volatility on actual OPEX day, which is tomorrow. But lately, I'm noticing more and more, we're starting to see the volatility a day or two before. Yesterday's drop was a very strong drop, very big sell. And today's rise has also been a very strong rise. We're up right now 1.3%, and it's been a strong rise. So I am noticing these OPEX movements are happening a little earlier in the week of OPEX. So just something to remember. We could see more swings today. Or we could just keep grinding up. It is a bullish sentiment day, that's for sure. We have recovered 6,800 on the S&P 500, the SPX, and that is a big zone. That it's been a pretty big magnet, that 6,800 zone, 6,800, 6,850. It's been a big magnet. I'll show you the daily chart here in just a second. All right, I'm going to go ahead and take the call here. I am in, punch it, and I'm going to give this a little time. This thing could grind very slowly, so we may not make a lot of money on this trade, but we're going to watch and see where we get to. All right, we're sitting at about 2% profit right now. 3. Coming back down a bit here. A little bit negative right now. And like I said, this may take some time. It's moving pretty slowly on this little, it's a kind of a little bit grindy, right? Little bit of a grind and go. And we are kind of sitting at a high of the day. So this could, it could take a minute to kind of reverse and go. It may reverse and then turn and go up. So we'll see what we get here. I don't mind stopping out if this thing drops. Stop outs are part of the game. You got to take them. You got to take the losses. It's not a bad thing at all. All right, a little bit of a reverse here. We'll give this a little time. All right, in the meantime, while we're watching to see what this does, I'm going to move over to our daily charts so we can sort of see what where we've been, right? All right, and I'm going to move this to the SPX because you can see the gaps better on the SPX. So let's go ahead and chart that. And we're getting a little bit of a move up here. So let's see if we can recover this top again. And we could range here also at the top. So that's what I said when we first got into this trade. We might be sitting in it for a while. We'll see. We'll see what we get. All right. So looking at the SPX here, and I'm going to open this up a little bit so you can see it better. We've got a lot of It's busy, right? It's a busy chart because I have a lot, I have a lot of supply and resistance zones here, or demand and resistance, demand and supply, resistance and support. I have a lot of zones drawn out here. So let me make these a little bit taller. There we go. So you can see, coming back to this original run to the all-time high, I'll show you that. We'll go sideways here in a minute. All right, and trust me, I'm watching my moves here. So we're bouncing up a little bit from this little bottom that we just made. Okay, here's our all-time high. That was done on the 29th of October. We immediately rolled over, came down. We came all the way down through. This blue line is the 50-day moving average. This green line is the 100-day moving average. So we came all the way down through the 50, which is unusual. We don't usually break the 50. And then we got a bounce at the 100. Then we came just within a stone's throw of the all-time high. But you know what? They never make it that easy. They kind of hold out that carrot a little bit. We did get a new closing high, but we did not breach the all-time high, which is sitting at 69.20 on the SPX. Where we got to was 69.01, 19 points short, which is nothing. That's nothing. So as we got up here, they just pulled it just short. Like I said, they like to hold that carrot out. And then we got this little rollover. So for 4 days, we have been descending. And yesterday was a pretty big red candle. So as we came down here, again, some of this can be OPEX. Some of this can be just unwinding positions. Some of this can be choppiness, really. Even though it looks like a pretty big red candle, and it is, in essence, we're chopping around in this range. Now, granted, this is a decent sized range, 6,900 to the bottom at 6,500, 400-point range. So granted, that's a decent sized range, but we really are just kind of chopping around here. We're not really going high or low. We're sitting right now in the middle of this range. And again, 6,800 has been a pretty important magnet. So you can see right here, we recovered 6,800. That's this line right here. So that got recovered today. We're actually just sitting just north of it, just a wee bit north of it. We recovered and we're back in this zone, which is where we've been. So we did come down and almost tag this support zone that I've got at 67.15. Our actual low was 67.21, but I have that support at 67.15. We came down within just a couple of points and then reversed. So I do think that we could potentially be moving into a Santa rally situation. And that's so-called Santa rally because technically it's the last 5 days of December or the first 2 days of January make up that season of time that we call the Santa rally. And it's called the Santa rally because, Wall Street's called it that for a long time because we want Santa to come to town and bring the stock market up, right? So traditionally, 79% of the time, that's a pretty high statistic. 79% of the time, the Santa rally does pan out. We do move up in that 7-day trading period. So keep that in mind. I think as we bounce here today, I think we're going to continue up heading into the end of the year. Now, could we bounce around some more in this range? Yes, we could. But I do think that we could be moving toward an upward trajectory toward the end of the year, up above 6,900, pushing 7,000 on the SPX. That's just my big macro picture. That doesn't have to play out. I could be wrong. Here's the thing. In my philosophy, we got to trade like water. What the chart gives us is what the chart gives us. That is what we trade, right? So that's my philosophy. Trade like water. I can have my big picture. It can be right. It can be wrong, but I've got to trade what the charts give me. And as a scalper, I've got to be willing to pivot very quickly. I can be moving up and then all of a sudden the charts say something different. I've got to be willing to pivot and go with the puts if that's what the charts are telling me. All right, so I'm going to move this back to the 1 minute. And our call is just so right now, down about 13%, just waiting for this to see if we can push up a little higher. Like I said, if we have to stop out, we do. That is part of the deal. I run about a 90% win rate. Sometimes it's higher, sometimes it's a little bit lower. I don't usually get below 85, and I don't usually get above 95, but usually running about 90% win rate. The reason I'm able to do that is because I take quick wins and I keep my stops. I do keep my stops. That's really important. And when you think about your win rate, that's how many, think of it this way. How many trades out of 10 are you going to win? How many trades do you win out of 10? That's your win rate. That's your percentage. If you're going to win 9 out of 10 trades, which is, trust me, not easy to do, the average, you can, I won't say the average, you can still make money with a 60 or even 70% win rate as long as you've got a good risk to reward ratio. But with a 90% win rate, I'm going to win 9 out of 10 trades. What that means is I've got to be prepared to stop out of at least 1 out of every 10 trades. And you can't get all bound up in the emotion of that. You've got to be willing to take your stops, because if you hold on to these things, especially in options, if you hold on to these things until they lose all of their value, you're never going to be profitable. You've got to be willing to say, that trade didn't work out, I'm out of it. You've got to be willing to say that. You've got to be willing to be wrong. And that's, some people would say, being a good trader is being a good loser. I would say that's kind of true. You got to be willing to take those losses. It's the way that it works. All right. So we're now just kind of moving sideways. And again, right now I'm sitting in a put, waiting for that to turn around. If we go too much further down, I am going to be stopping out of this trade. But I'm going to give it a little time first. We've got a little room here yet. All right. So just kind of a sideways movement right now. I'm going to give that a little time. And in the meantime, let's look at, I call this our leaderboard. The leaderboard is really nothing more than my watch list, but I keep a lot of different stocks on here that I'm watching. When we talk about the movement of the S&P 500, that is really being pushed by about 7 or 8 large stocks. You've heard me talk about this before. These are called the Mag 7. Some people, would say the Mag 8 if you include Broadcom. But the Mag 7 includes these big, mega, trillion-dollar companies, the tech stocks, Apple, Amazon, Microsoft, Meta, NVIDIA, Tesla, Google, and then you could include Broadcom in that. Those stocks are going to make up at least 40% of the value of the S&P 500. So as they go, so goes the S&P 500. And by the way, so goes the NASDAQ. So as these stocks go, the indices will follow. So looking at the leaderboard helps me to kind of determine where are we going. Sometimes the Mag 7 leads and sometimes it follows, but usually they're going to be in sync with each other, the S&P 500 and the Mag 7. So I'm watching these guys, right? So we've got right now on our leaderboard, we've got Tesla up almost 5%. Well, that's pretty impressive. Amazon up 3.5%. That's pretty impressive. Meta up 2.7, not too bad at all. NVIDIA up 2.5. Google up 2 points. So basically all of Mag 7 participating in this rally, which tells me this is a pretty strong rally. So we will keep watching for upward movements. Now, again, with OPEX coming tomorrow, we can see some wild swings. It does happen. We have to be prepared for that kind of volatility on OPEX week. But right now, we're just going to give this a little time and kind of watch what we're doing. We're building a range right here. That's what this is here. Now, we just took a little bit of a dip, but we're building a range right here, and we haven't broken through this bottom yet. So let's keep watching, and we'll see if we're going to get this to bounce back up again, or we're going to break through this bottom. All right. Little push down here. All right, pushing through the 50. First time we've done that this since about maybe a couple hours it's been. So we came up through the 50. That's this kind of royal blue color line. We came up through the 50 and hit this high. And remember, we talked about this high of day being a potential resistance zone. What's acting like resistance right now. So we came up through, we hit this resistance zone, and now we're coming back down through this 50. So let's see what we get here. Let's see if it continues down. If it does, I'll have to stop out of this position. But let's see if we can get a turn and go to the upside. All right. A little bit of a move here. So the other thing, my charts are busy, and I know it kind of can tend to look like a bit of a Christmas tree here, but a couple of things I'm really always going to be looking at, and that's going to be this VWAP right here. This white line represents the VWAP. That is the volume weighted average price. That tells us a little bit more than a moving average. So these are all moving averages. All of these, the pink, green, yellow, blue, those are all moving averages. So is this 100. But the VWAP is also a moving average, but it takes into consideration the volume traded at a certain price. So if there's heavier volume, and you can see the volume here with these blue lines down below, these are volume lines, you can see how the volume changes. Well, the volume weighted average price, the VWAP, is going to take this volume and it's going to add more weight to the price where the volume spikes. So for example, right in here, we've got a nice volume spike. The VWAP is going to respond to that. So keep that in mind, that this is it's a great indicator. It acts as a magnet, and the VWAP also tells me kind of what side of the highway are we on? Are we bullish? Are we bearish? As we are moving up and above the VWAP, that is bullish. I would always say to new traders, don't trade puts above the VWAP and don't trade calls below the VWAP. So remember, puts are for when you think the market's going down. Calls are for when you think the market is going up. So if we're over the VWAP, chances are good that we're bullish. Now, can we reverse and come down through it? Of course. But chances are good if we're over the VWAP that we are bullish. So you want to be careful with puts over the VWAP. And the same thing with under the VWAP. If we're under the VWAP, trending down, now today, let's zoom out a little bit and I'll show you. Today, we haven't been super bearish because we hit below the VWAP a couple of times right here and right here. We went below the VWAP, but we didn't stay there. So, right, see that white line, that's the VWAP. and then it comes down and it recovers the VWAP, comes down, recovers the VWAP. So even though we did some dips below, we didn't stay there. We didn't spend very much time there. So this is much more of a bullish day. But again, if we were having a bearish day like we did yesterday, we spent pretty much all day below the VWAP. When we're doing that, it really does make sense to stick with puts when we're below the VWAP, stick with calls when we're above. All right, Slay has a question. Do you use a simple daily resetting VWAP or do you use an anchored one? Great question, Slay. Thank you for that question. I use a simple VWAP. It is not an anchored VWAP, and it's looking at the day. I'll show you my settings on the VWAP. I've got the standard deviations set at 2 above and 2 below. That's these outer bands. And then I've got it set for the day. So it's always looking at today's chart. Now remember, the SPY trades almost 24/7. So when we're looking at the day, we're looking at a bigger picture when we're looking at the SPY. But great question. Thank you, Slay. It is a daily VWAP. Now, anchored VWAPs have their place, and I like them. You can go to a low like we just had, and that was showing you that V on the daily chart. You can anchor a VWAP from the low there and just follow that. That's going to give you some interesting trajectories. You can anchor one from the high if we're moving down. So anchored VWAPs, I think, are a good tool, and I do like them. All right, but thanks for that question. Okay, so again, for beginner traders and even advanced traders, just be careful with puts above the VWAP and calls below. Simple rule. If you follow the VWAP with the MACD, those two things are going to really keep you out of a lot of trouble. If we are in a situation where we're above the VWAP and we've got the MACD going to the upside, so this is the MACD down here. MACD stands for Moving Average Convergence Divergence. It's basically looking at the combination of two moving averages and how they're moving together and apart. It tries to gauge momentum and direction. So I like the MACD for that reason. When you see the MACD rolling up, turning green, and you're over the VWAP, that's a good signal. When you see it turning red and you're below, that's a good signal. Now, again, we went below. It wasn't for very long, but the MACD did confirm, and we could have taken a scalp trade in here. We sure could have on both of these. And remember, my scalps are usually pretty fast. So when we drop down through the VWAP, we've got the MACD confirming, we're moving lower. That's a great trade. That's a great trade right there. All right. So we're just moving sideways on the trade that I took, and I'm just waiting for this thing to finish this sideways move because I'm kind of stuck in it right now. But usually I like to be in and out pretty quickly. So yeah, so there's the VWAP, there's the MACD. Those two things are really going to help. Then I throw on a couple of other lines here on my chart. So I've got, again, right here, this is yesterday's high of day. I have yesterday's high of day, yesterday's low of day. I have last night's high of day, last night's low of day. And then I have the opening range high and the opening range low. Those are all areas of interest. You can see right now that we are stalling out at yesterday's high of day. So we're going to need to get a push over that. I think eventually we will, but it's really kind of making us wait. And that's okay. I'm okay waiting for a little bit. But I think we will get a push over this at some point. Right now, it's just trending sideways. All right. And as we speak, we did get a little push. That's nice. Very good. Let me zoom in a bit here so we can see these candles a bit better. All right. Our call is brightening up a little bit, not looking quite so red. It's coming back a little bit for us. Looking better. Nice push on volume. Do you see the volume bar here? Nice push on volume. Let's give it a little bit more here, just a little more gas. Let's see if there's any more gas in the tank here. Or are we just going to continue in this range? All right, little slowdown here after that push. Excuse me. All right, and while we're waiting, we can also talk a little bit about the data. So yesterday we had some labor data. Today we had the CPI data. Now, you don't want to feel like you're having to be an economist to trade the market, but it is important to at least have your ear to the ground when it comes to data. Certain things like the CPI, which came out today, can really move the market, as we can see. Today's push up is largely in part due to the CPI. CPI stands for the Consumer Price Index. That is a measure of inflation. So the market really loves free money, right? And the Fed is currently looking like they're about to start handing out some free money again. We got a rate cut. We got the Fed kind of talking in terms of quantitative easing, even though they haven't used those words. It's kind of what they mean. And these are all big words, especially if you're beginning. But basically, what it means is the market likes free money. The Fed is handing out free money. And for the Fed to do that, it wants to see inflation coming down. And it did see that today. We all saw that today, supposedly, right? We live in the real world. Inflation does not feel like it's coming down. I don't think it feels like it to you. It does not feel like it to me. It is expensive and getting more and more expensive every day. But government numbers are government numbers. They are what they are. And we are going to have to live with that because that's the data we get. We all know in the real world, inflation is not coming down, but that is what the CPI showed. So the market cheers that. The market likes that because the market wants free money, wants more money pumped into the system. The market will continue to go up and continue to inflate this bubble that we're in, right? So people will say, are we in an AI bubble? I would say, yeah, we are in a bubble. That is my opinion. However, that bubble can continue to grow as long as the Fed is willing to pump free money into the system, give us some liquidity. That bubble can continue to grow. Is it going to pop? Yeah, we're going to pay the piper at some point, but nobody really knows when that bubble pops, right? So that's the idea there. So data, you don't need to be an economist to trade the market, but you do need to keep your ear to the ground when it comes to data. When you know CPI is coming, pay attention. Don't hold these overnight trades necessarily unless you're feeling pretty confident about the direction of data, because these things can really move the market in a big way, as we saw today with CPI. So that's the idea on data. There's a good product out there, the economic calendar. I think it's a Bloomberg product. I'll drop that URL here in the chat for you. This gives you kind of a nice way of watching data that's coming, and it kind of rates it. It tries to tell you how important the data actually is. So it gives it like these bullhead ratings, right? So if you get a 3 bullheads, that is considered important to the market. Well, that's not what I wanted to put in there. Give me a second. Let me try again and grab that URL. All right. There we go. Copy. All right. So that's the economic calendar. Like I said, it's a good thing to just be aware of what's going on if you're going to be trading the markets. These things can move the markets and you don't want to be caught off guard. All right, making another go at this little top here. See if we can get another little push upward. Now it's just stalling out. So still just really hovering around this high of day zone. All right. And if anybody tracks Bitcoin, I am a big Bitcoin bull, believe it or not, even with the recent drop. I think Bitcoin is really going to be moving up in 2026. There's a lot of institutional adoption. Even the government has gotten behind crypto. So Bitcoin is at the forefront of all of that movement. So I am pretty bullish on Bitcoin. We did get a pretty nasty slam all the way down to 80. We were at an all-time high of 124, 125. We got slammed. We got kicked into kicked into last year, basically, on that Bitcoin drop, but we're holding. So Bitcoin got as low as 80 and tried to hold that bottom there, and it's kind of holding its own here. Still has not recovered that 90, 94 zone. That's where we need Bitcoin to get to. I'm pretty confident it will. But we're getting a nice little push today on Bitcoin, about almost 3% push up. So that's good. I am in a couple of different products. I'm in BMNR, which is an Ethereum treasury holding company, and I'm in MSTR, which is a Bitcoin treasury holding company. So I'm trading those with spreads. That's a different strategy, a different style of trading, but I'm feeling pretty good about the future of Bitcoin here. So I'm keeping my eye on that. All right, so we're still fighting with this trade here, still giving us grief. And as I often say, 90% of trading is patience and waiting. It is a lot of patience and waiting. So that is something that you really have to be aware of if you're going to trade. Some people will say, "Oh, how do you just sit there and stare at screens all day?" It's what I do. It's my career, it's my living, and I love it. I absolutely could not imagine myself doing anything different. All right, Corey Smith. Welcome, Corey. Thank you so much for joining. Your system looks amazing. That's so kind of you to say. Thank you so, so much. I appreciate that. Like I said, my charts can resemble a bit of a Christmas tree. They're busy, but I appreciate the kind words. And like I said, I do pretty well. This is what I do for a living. So I'm pretty comfortable with my system, and I just love trading. And I like helping newer traders as well. So I do a lot of coaching. I do a lot of talking to people, and I'm always about trying to help somebody um, get financially stable. Now, there's a lot of people out there on YouTube and Facebook. You see them everywhere. Some of them are legit. I'm going to say the vast majority are not, but some are. And a lot of people are talking about they're trying to sell systems or this or that. But basically, I'm just trying to help people learn, because in my opinion, trading the stock market, it's one of the last great frontiers for building wealth. Now it's challenging and a lot of people lose money. So you got to learn, right? You got to put the time in, you got to put the effort in. It's not, a lot of people will say, "Oh, I just want to, I want to make 10% of my account every day. I want to trade for 45 minutes and I want to be done." I'm just going to have to tell you, if you're listening to people out there in YouTube, Finland, or whatever they call it, if you're listening to people telling you that, "Oh, I took 45,000 a day in 10 minutes of trading," it's baloney, right? Yeah, maybe they took a 10-minute trade. Maybe that's real. But they're not talking about the hours and hours that they've spent learning how to do this. And I can tell you, I've spent years learning to do this. And so it's no free lunch. It's no, quick, get rich quick. It's going to take the work. You got to put the work in. You got to learn. But in my opinion, it's worth it. I love it. I'm here on the charts every day. I wouldn't be anyplace else. It's what I love to do, and it's been good to me. Trading's been good to me. All right. So this trade is looking icky. I think if we beat this low down here, I'm going to go ahead and stop out of it. But I'm going to give it a little bit more time because we're still doing this sideways dance. I think if we come down here, I'll probably stop out. Come down and break through this significantly. I'll probably stop out of it. And again, stop outs are part of the game. You got to take them. You got to take them. You can't hold on to a loser. I had my friend say something one day, I never forgot it. I was talking about trading and holding losers, and I said, "You got to let the losers go." And she said, "Kind of like your exes." And I said, "That's hilarious." And I'm going to remember that. You gotta let those losers go. That's how I like to think of my bad trades. And it's really okay. You can't stress about, in all seriousness, you can't stress about the losses. 1 in 10 trades, 2 in 10, whatever your win rate is, they're not going to win, and you got to be okay with that, and you got to cut your losses, and you can't let those things drag you down. Don't let the losers drag you down. Don't do it, because if you hold losers for 100% loss, you're never going to be profitable. So that's my little soapbox on taking your stops. Very, very important. All right, a little bit of a tiny green candle after a little dump here. Let's see where we go from here. Looking just slightly negative, but I'm not too worried because we really haven't broken this range yet. So this range is what we're stuck in. I'm not too worried about it. If we break the range, which will be coming down here, that's where I'll get out. And in the meantime, just watching. All right. Everybody's still climbing pretty nicely in the Mag 7 world. UNH down a bit today. But everybody else pretty green today. Qs are up nicely at 2%. We're up at 1.25. I'm still feeling pretty good about another leg up. All right, it's just making slow moves right now, which it's been kind of doing since we've been ranging. So we'll just be patient. We're up 1.2%, 85 points on the SPX. Nice recovery. Nice recovery of 6,800. That's also kind of the level that we're fighting with right now, as well as the overnight high, or yesterday's high, I should say. That's another level we're kind of, they'll hold 6,800, I'm pretty sure, on the SPX. Pretty sure we're going to hold that. All right. A little bitty move up here again. Nothing major, just tiny ranging moves. And again, sometimes we get stuck. This is called being stuck in the chop. It happens. It's part of trading. Not my favorite. I don't like being stuck in the chop, but here we are. Kind of like slogging through the mud. All right, so usually in this window, I'm holding the ES, which is the futures over the S&P 500. They basically move in lockstep with the SPY. You're going to see the charts looking almost identical, but I do chart them just a little differently. I do put a few different indicators on the ES that I don't put on the SPY, so that's kind of the way that works. Every now and then you'll see the ES pop up just a second or two before the SPY, or vice versa. So usually they're within a fraction of a second of each other, moving in the same direction always. All right, coming back up into range. Still just very slowly sidewinding. That's what we're doing, sidewinding. All right, so we've got a few more minutes left on the stream. If I'm not out of this trade, I don't know if anyone followed me on the trade. If you did, and I have to end the stream before I get out of this trade, just know that my bookends basically for getting in and out are going to be down here. We come down here and break this. I'll stop out this low right here at basically 679.5, but it's got to break it. You can't just match it. It's got to break it. And then I'm looking for a push up over this top right up here at 680.7. So that's where I'll get out at profit, a push up over this top, and I'll get out at loss at a push down below this bottom. That's basically the range that we're in. So if anyone followed me on that trade, that's what I'm doing if we have to drop from the stream, okay? All right. Well, if anyone has any questions, we've got a couple more minutes before we drop, and I'll be happy to answer those. You've got my plan for this trade. And then plan going forward for today. I am bullish today. I do think we'll get another leg higher. That doesn't mean we can't drop. Remember, we talked about OPEX. We can get a drop today, and it can be severe. It does happen. So again, we've got to trade what's in front of us. We've got to watch the charts and use your do your due diligence. Use your indicators, watch your charts. Don't just go with a bias. It's really important not to just go with a bias. All right. But again, so big picture today, I think we're bullish. However, could we get a significant drop today? Yeah, we sure could. It could happen. So we'll be aware of that. All right. Well, it's been really good being with you this morning. I really appreciate you being here this morning. I appreciate you jumping in on the chat. Slay talking in the chat, and Corey talking in the chat. I appreciate that input and your questions. And Slay saying thanks for the stream. Good luck with your trade. Thank you, Slay. So far, not looking good, but like I said, I'm not afraid to stop out, so I'm not too worried about it. But thank you guys for being here. I appreciate you. We'll be back again tomorrow at 9 a.m. Mountain, which would be 11 a.m. Eastern. All right. Good to see you all. We'll be back tomorrow. Take care. Bye for now.